Okay, so today is an interesting topic. What do you do when you have a stock that falls out of bed? You know, you bought something, and next thing you know, it's down maybe quite a bit, and you're not sure what to do. Well, today on Steve's Stock Stories, we're going to discuss that. And I'd like to introduce my partner in crime over here, Jocelyn Magana.
Jocelyn McGutton, that is figuratively, partner in crime, figuratively, okay?
We're not so sure, but all right. So we talk a little bit about stocks today, and I remember a stock, well, it's a company called TCBY. You older people who are watching it know who TCBY is.
I almost completely forgot who TCBY was.
Right. For the younger folks who are out in our audience, TCBY is short for This Country's Best Yogurt. And it was a big yogurt chain back in I think it was the late 80s, early 90s.
Yeah, like I said, I remember now. I was in Aptos, and I think there was one on 41st Avenue in Capitola.
Did you go there?
I had friends that went there a lot.
right.
I wasn't a big yogurt guy at the time. I still liked just regular ice cream.
Well, I'll tell you what, we used to go to TCBY all the time. It was a big fad, I guess, although yogurt's still around, frozen yogurt's still around.
I eat more yogurt now. I eat the Menchie's. The Menchie's is good.
All right, well, this story is about TCBY.
All right, we'll circle back. I digress.
All right, at any rate, TCBY was growing like crazy. And I believe it was the late 80s. And it kept growing. And finally, you know, I decided that this might be a good company to buy. And I waited for it to pull back in their stock. Actually, I think what had happened is a lot of the professionals had shorted the stock. In other words, they were hoping the stock was going to go down. And we talked about shorting stock, by the way, in a previous episode.
That was, I think we just talked about that, right? And how to make money when the market goes down.
Right. And you can get that episode at wwmfinancial.com.
Just there's a tab that says podcast at the top of the menu there, and you'll be able to check out all of our episodes.
Right. So anyway, the professionals were shorting the stock after it had had a huge run, and I figured, okay, this is a good chance to buy. And it was around, I think it got as high as about $28 a share, and it got down, it was around 19 or 20. And I said, you know what, this is a good buy. Well, about a week later, they came out with earnings that were as bad as you could ask for. And the stock pretty much went from about 19 or 20 down to about 14 or 13. I can't remember the exact price, but it was down by maybe 30, 35% in a day. So now you have to look at this stock and say, you know, is this something you want to hold? Well, I determined I didn't want to hold it. And we'll go over that a little bit, the difference between a broken company and a broken stock. Because I thought this was a broken company. So I got rid of it, and although I suffered a very short, serious, painful experience, it was the right move, because what eventually happened was TCBY started having competition, a lot of competition. And there was, eventually, they started having more difficulty in making profits. And eventually they were bought out by Mrs. Fields.
I love Mrs. Fields.
All right.
I absolutely love Mrs. Fields.
Yeah, and I don't even know if Mrs. Fields is still around anymore. But
yeah, they were like a mall thing, and I think the malls are having a hard time right now. You know?
Exactly. So Mrs. Fields bought them out, and eventually they went bankrupt. So TCBY went broke. The stock pretty much went down to just about zero, and it was, you know, so I lost a little bit, but not as much as I could have. But the lesson there is really determining whether the company itself is broken or it's just the stock that's going down. So if you think that the company itself is broken and that it's, you know, really going down a lot more, it's time to take your loss and move on. However, there's times, many times, I mean, if you could look at let's take an example of Apple, certainly a great company.
That's a great example.
Right. Over the years, I mean, it has had times when it's down by 20, 30%. And you're thinking, well, this has probably played out as much as it has. But no, the company itself was good. It's just the stock price had come down. Maybe there were people who had ridden it up and they said, hey, I'm taking my profits, traders, or maybe had some short sellers in it saying it got too high. But eventually that stock came down, and it was a good time to buy the stock because the company itself wasn't broken.
Well, that's interesting. Just from my perspective of, I was a big fan of Steve Jobs and Apple. And in my reading of his biography, to some degree, well, it's his biography, so, he probably has his own views, which are pretty skewed. But it seemed like that company kind of was breaking. It seemed like when Jobs came back, he kind of resurrected a broken company, which was a leadership issue.
Well, actually, that's a time frame issue too, because back in, I don't know what years it was, but Apple was trading at maybe $1 a share, and nobody wanted it because it seemed that they were losing the battle against Microsoft. Everything changed, and I know we talked about this again in another one of our episodes, but everything changed when they came out with the iPod, and then they came out with the iPhone, et cetera, and things changed for Apple dramatically. But I mean, you could have been in Apple for many years and not made anything.
Right.
All right. But now I'm talking about a more recent time frame,
Right,
where after the stock had started going up a lot, it might have gone to 300 down to 200.
Oh, I see what you're saying. Kind of the new era for Apple post Jobs.
Correct.
Tim Cook and those guys seem like they know what they're doing. I mean, now it seems like they're really solid.
Yeah, it seems that way. Again, we're not telling you go out and buy it today, although Apple's a good company. As a matter of fact, all the stocks that we talk about on this show, are really, we're not giving you personal advice. That's something you need to go and talk to your advisor or go do your own research. This is just for informational purposes. Another company that was one of those like TCBY that I remember was Boston Market. Do you remember Boston Market?
Clearly I don't. What did they do?
They're still around.
It's like a restaurant?
No, it was a fast food chain. Actually,
Okay. I'm familiar now.
McDonald's owned it, and Boston Market had chicken
Chicken?
Yeah, had rotisserie chicken.
Really? It wasn't like seafood?
No, that's something different.
I've never been there. I think I've seen them, but I've never been there.
Right. Well, there was actually some around where we live, but at any rate, McDonald's owned the franchise, and they sold the franchise, and so it was its own entity. And the people who ran it it seemed like they were doing great. They were expanding like crazy. Then all of a sudden, the stock started having trouble. So we did a little investigation into it, and we found out that what was happening is that the people who were who owned the company, who were running the company, not only were they getting franchise fees, but they were also selling the food to the franchise. And they were selling it at a price that was so high that the franchisees couldn't make money. So at some point, as a stock, you had to realize, and I didn't have a lot of Boston Market at the time, but I know some people who did. So as a stock, you had to realize, or as a company, that there was something fundamentally wrong with the company.
So they were forcing the franchisees to purchase overpriced product and try and sell it?
Exactly.
They couldn't go somewhere else to get
No.
it? Wow.
No. And that was the problem. So the franchisees, they just couldn't make money. And quite honestly, I loved Boston Market. They had rotisserie chicken, and then they expanded it. But there are very few of them left. There still are some left, but there's not the amount that there were. So, as you can imagine, I mean, the stock just cratered, okay, because the company itself was bad. All right, the way they were running it.
So how do you find out if a company's broken? How can you tell?
Well, again, another one of the episodes that we did here on Steve's Stock Stories, we talked a little bit about how to value a company. And some of this, it takes a little bit of expertise, but you have to find out what's the reason that the stock is going down. Okay. Sometimes the stock just goes down just because it just got too high. It ran too fast. I can give you hundreds of examples of that currently. That's happened with a lot of technology stocks. They've run so quickly. Well, they're probably overpriced, and so they pull back in price. And when they do that, if there's nothing else that you can find that's wrong, there's no mismanagement. As you said one time, one of the companies that we follow was poisoning you.
Yeah.
So, I mean, that was the Chipotle story.
Yeah, that's right.
And then obviously that's an important issue. But again, even that, once they figured that out, the stock came back.
Well, that was a fixable issue. I mean, that seemed like they had some systems they had to fix. There's some chinks in the armor there, but that seemed pretty fixable. Sometimes, though, from a PR standpoint, it's not, right? I think, what was it, Seasons or something like that way back when, had poisoned a few people, and they got erased from the map.
Yeah, I don't know about that story, but
yeah.
I know that Jack in the Box at one time had an issue. This is quite a number of years ago, And nobody would go there. Of course, they fixed it, and
Yeah.
and the company came back, and of course, the stock comes back with it. So, and that was the case with Chipotle. I mean, the company itself wasn't broken; they had an issue that they could fix, and they did, and the stock has come back since. Now, there's other things that could happen that there's no fix for, and this is where you get into sometimes the more risky stocks. There was a biotech stock that I had bought for my clients' portfolios. This was about 5 years ago, and truthfully, I can't remember the name of it. I just remember what happened. And I bought the stock, and literally 1 or 2 days later, they came out with news that the product that they were trying to work with, the biotech industry, what they do with drugs. They try to come out with a new drug.
Yeah, they were doing the research and development to manufacture
Right.
a new drug.
Right, in the research and development. And it came out that the drug itself had terrible results and it didn't work. Well, the stock was down 90%.
Oh my gosh.
So 90% in 2 days from where I bought it. And
So was this, were they betting everything on this one drug, or do they have other drugs? Or?
no, well, they had some other things in the pipeline, which is why it didn't go to zero. But this was their big drug, and it didn't work.
It flopped, it failed?
Yes. So the stock was down. Not much you could do, and all you could do is say, "Hey, I'm sorry," and move on.
Wow.
Take whatever is left of it and move on. That is a rare. Well, I shouldn't say it's a rarity because I guess it does happen, and it happens more in fields like biotech where you don't have earnings and you're betting on the come, so to speak, as opposed to companies that have earnings, they have sales and all that. And that's another thing too. How risky do you want to be? When you're looking at a company like a yogurt company or a chicken company, I mean, yes, restaurants are risky, but it's not the same thing as a biotech company whose product may never come to market. And they have to go through test after test after test after test, which is actually one of the things that when we talked about the COVID vaccine, and one of the great things here is how they have done such a fast job of getting through this.
I almost don't even want to go there on this conversation because the other day I was thinking about how fast they put together this vaccine, and I thought, well, this is a virus. We got all kinds of viruses they supposedly don't have real cures for. All of a sudden, within a year, we've got 3 companies or at least two companies that have 95% successful vaccines.
Right.
Supposedly.
Well, what's interesting is that they're using a lot of the new technology to do this, and they got the okay from the government that said we're going to speed things up.
True, they got green lighted.
Yeah, they got green lighted. But what's interesting is they could come up with something so quickly. Okay. Traditionally, it takes years and years and years to come up with a lot of this stuff. And that's the problem when you're investing in some of those types of companies.
Right.
So basically, the first thing to look at is the company itself a solid one? And then when the stock goes down, you just have to do your homework. And that's really what this always comes down to.
Yeah, it sounds to me like it comes down to research, right? I mean, you got to dig deep. You got to dig deeper than the headlines on the newspapers and figure out if the franchisees are getting extorted by the company.
Well, the other thing that happens too is sometimes there's malfeasance. When you look at some of the companies that have gone under, it's because of accounting irregularities,
yeah.
or they were stealing or cheating, or and there's many of those examples.
Well, you were mentioning, I know we were talking about, kind of circling back to that other episode on valuating a company, that, it's hard to fudge sales, but you can do a lot of smoke and mirrors, or maybe, I don't know about a lot, but there's enough smoke and mirrors in the accounting system that that you really want to kind of look at sales as well. It's hard to fudge sales, I guess.
Right. I mean, your revenues are what your revenues are. Now you can massage revenues a little bit if you include things like sales of companies and all that within your company.
Right.
But the actual sales are what they are. You can't really cheat on that. But yeah, accounting can make things look better than they are. But I remember, what was it, WorldCom?
Yeah.
Where they were just cheating, and Skilling from, what was the company, who ended up in jail for fraud, for years.
But not Enron, was it Enron?
Yes, it was Enron.
Yeah.
Thank you. It was Enron. So, you have to kind of look through and see what the heck is happening here. Because when a stock goes down, if it's a great company, that's the time you want to buy.
Right.
But you got to know the difference. Is it the stock that's down, or is it the company that's down?
Or is it just like a market correction, or, kind of like the entire market's going down
Right.
for a period of time?
Exactly. And when that happens, look, recently that happened in March of this year with COVID. The whole market got hammered because people were afraid and didn't know what to do, and of course stocks always go down faster than it goes up, and that was a great buying opportunity, especially for the technology companies. But most people were paralyzed and afraid to buy.
Yeah, well, this is a really scary time. I mean, if you even look at some of our podcast episodes, we were like, we've never seen anything like this before. I mean,
Right.
A pandemic for real. I mean, this is all the conspiracy movie type stuff, right? You see the preppers on TV, and everybody's like, "When's there ever going to be? These guys are crazy. Why would?" But the preppers never had that much toilet paper. Okay, goes to show everybody else is a bunch of rookies. All right.
That's right. Well, it's funny because with the recent lockdowns again, you go to the grocery store, and again, people are hoarding toilet paper.
I was just at the store for Thanksgiving to go get some knickknacks, and Catherine sent me there for some paper towels, and surprisingly, there was enough toilet paper, but there was absolutely no paper towels. There was a couple, like 16 packs, right? Who buys 16 rolls of paper towels?
Oh,
Yeah,
we
so I'm
do.
standing there in line with a big bag of 16 rolls. Some guy comes behind me. He's like, what's going on with you? I said, look, there's no towels. This is all there is.
Well, the funny thing is, going back to toilet paper, is my wife has been a toilet paper hoarder forever. When we moved from one house to another, I swear 14 boxes worth of toilet paper moved with us. So we had tons of toilet paper. And she does the same thing with paper towels, but not to that degree. And it just surprised me how, because let's say that you have to be in the house for 14 days. How much toilet paper can you use for 14 days?
Yeah, that was bizarre.
But okay, so now you look at that. There's another example of how you can look at a stock. Who's selling the toilet paper? Is it Procter & Gamble? Is it
Right.
Kimberly-Clark? Whoever it might be, and those stocks have actually done pretty well.
Is that more of like a short-sighted thing, though? I mean, it seems like they're gonna benefit from that situation for maybe a year, maybe 2 years, and then the demand, the artificial demand for that's going to wither, right?
Yeah, and because you're bringing a lot of the sales forward. 'Cause,
Right.
how many rolls of toilet paper are going to use in the next
Yeah, once
year?
people stop getting scared and things
Right.
circle back to how they were, I don't know.
Right, but for other companies, it's proven that there's some permanent changes here.
Oh, absolutely. I think there's some technologies and some ways that we're living that I don't know if we're ever going to go back to the way it was.
Right. Well, you look at a company like Zoom, and I'll be honest with you, when this pandemic started, I said, okay, this will be a fad. But then I realized probably a month or 2 or 3 later that this isn't a fad with Zoom, because people are going to do more and more online virtual.
Or even a hybrid. We started doing the curbside pickup.
Right.
So we started doing the shopping for some appliances. I needed to go to Best Buy. I've had enough frustrating experiences trying to find what I want, and it's all gone, but I can get it online and go back to the store and pick it up. So now I just find everything online at Best Buy, drive into the parking lot, text them that I'm there, and some person loads my stuff into my car.
Exactly.
That's the best service ever, and it doesn't even cost more.
Yeah, it's really interesting. And just going back to Zoom, we're not recommending you buy Zoom necessarily right now.
Or Best Buy.
Or any of the companies that we talk about. But Zoom came down in price when it looked like we were coming out of this pandemic, and the price started coming down a little bit, and that might have been a good time to buy. I don't know.
Yeah, we'll see on that, huh?
Yeah. So, but yeah, there's some permanent changes. Again, so just as an example, will Zoom be a broken company or a broken stock? Okay, and that's the kind of things you want to look at when it goes down like that. All of a sudden, everybody was wanting to get out of the growth stocks and get into value stocks. Well, that to me would not necessarily say it's a broken stock, a broken company. It may just be a stock that's going to pull back because valuations.
I see.
Okay, so those are the types of things you have to look at. And if you get good at it and you can figure it out, you can make a lot of money, because you want to buy those companies that are down in price but not down and out companies.
Right.
So that's where we are. I think that going forward, hopefully we'll get more and more opportunities. And if you have that extra money, always keep a little, I always like to keep a little bit of money on the side.
Yeah, absolutely. A little dry powder.
Exactly. Some people, they say to me, well, why aren't you investing all the money? I'm not making any money on that. Well, remember, you can make more money by buying right than by doing anything else. So if a good example of this was a while back, a company that we owned, an insurance company, went from about 45 back to about 30 or something when COVID hit, and I went in and bought more. Well, today that insurance company is at about 123 or 24. So I mean, that's the type of thing you dream about and you live for. So make sure that when stocks go down, you understand why they're going down, and if every stock is going down because we're scared about something, that's the time. At least in the past, it's always been you should be wanting to buy. Okay, and we do just the opposite, and that's another episode I want to do for Steve's Stock Stories. I want to talk a little bit more about behavioral finance.
I think that's huge. I think the behavioral aspect is really, a lot of people can find themselves doing pretty good at maybe managing their portfolio and reallocating over time. However, it's how you respond to these big corrections that are inevitable.
That's right. And no matter what, look, every asset goes up and down. Every asset. I hear a lot of people talk about real estate never goes down. Well, that's not true. Look at what happened in 07, 06.
It's guaranteed. I mean, look, well, I'm going to take back the word guarantee because of this type of program. Nothing's ever guaranteed.
Nothing's guaranteed.
We don't guarantee. Nothing's guaranteed. There are no guarantees. Okay. So, however, historically, there's always been a cycle and a correction, and there's these weird corrections that come, and they're usually pretty big corrections, right? And there are always some unknown, bizarre, weird reason. And even coming into this pandemic, correction we had back in was it March or April? Yeah. I remember thinking, look, everything's going so well up to that point. It always seems like whatever correction we have that's large like that or hugely impactful, it's unpredictable as to what it is. Like you just don't see it coming. I mean, nobody saw this coming.
Right, and it's funny too because governments are always behind the times. So something happens, and then you get a whole bunch of legislation that worries about what just happened. The next problem is going to be something completely different. It's always this black swan event. 9/11 was one that happened. The real estate crisis in 08. COVID, this year, it's always something different.
That's what I mean. It's unpredictable. It just comes out of left field.
Right.
But
that's where you can make a lot of money.
Yep.
That's where you got to say, hey, everything is down and not everything is bad. I mean, even with COVID, I'm thinking, well, we're not going to stop eating. We're not going to stop using toilet paper. We're not going to, those basics, we have to be there.
And I think there's some pent up demand for some industries that people are going to be scared to use them this year, maybe even going into a year after the vaccine. But at a certain point, the fear is going to fade. Things are going to hopefully seem somewhat normal. And if those companies aren't destroyed or decimated, like some of the travel related and maybe some of the restaurant related and even mainly travel related companies, if they were able to weather the storm, might be interesting companies to look at.
Absolutely. Absolutely. And, I've got a couple props here, and I know if this is a podcast, you can't see it, but we film it. So I want you to see that I've got my Chicago Bears football and my little Chicago Bear over here. And I'm trying to figure out, are they a broken stock or a broken company? They started off the season, they were 5-1, and now they're 5-5. And I got to say, unfortunately, they're a broken company.
Oh, man.
I think that the Bears are not going to make the playoffs this year.
You're not giving up on your Bears, are you?
Well, just for this year. I mean, it's a broken company, but maybe I'll buy into them again next year. So
that's funny.
At any rate. So listen, it's been a fun episode. Jocelyn, thanks for helping out again, as usual.
Always a great time.
And always setting this thing up. And for those of you who want to get some of our previous podcasts, wwmfinancial.com. That's WWM as in Mary, financial.com. And actually, I've got something else, too. If you want to know about some stock secrets, investing secrets, go to WWM Financial. www.carlsbad.com/investing secrets.
Sorry, I think it's www.financialcarlsbad.com. So it's www.financialcarlsbad.com /
Investing secrets.
There we go.
You're right.
Is it / or backslash?
Slash one of the one
Yeah,
way or the
you
other.
try one or the other.
Anyway, so thanks again for listening, and we'll see you on our next Steve Stock Stories.
Take care. It's been good.